The deal between ONEOK and Magellan Midstream Partners will create one of the largest energy infrastructure companies in the U.S. With a diversified portfolio of natural gas liquids, crude oil and refined products assets. The combined company will have a market value of about $40 billion and operate more than 30,000 miles of pipelines across the country. By acquiring Magellan, ONEOK will expand its presence in the oil and refined products markets, which are expected to grow as the economy recovers from the pandemic and demand for transportation fuels increases. Magellan owns the longest refined petroleum products pipeline system in the U.S., with access to nearly half of the country's refining capacity. It also has a network of crude oil pipelines and storage terminals in key producing regions such as the Permian Basin and the Bakken Shale. ONEOK, on the other hand, has a primary focus on natural gas and natural gas liquids, which are used as feedstocks for petrochemicals and plastics. ONEOK said the deal will enhance its ability to participate in the ongoing energy transition with an increased presence in sustainable fuel and hydrogen corridors. The company also expects to benefit from Magellan's tax structure as a master limited partnership, MLP, which will provide about $1.5 billion in tax savings between 2024 and 2027. The deal is expected to close in the third quarter of this year, subject to regulatory approvals and customary closing conditions. The transaction will be financed with a combination of cash and stock, with Magellan shareholders receiving $25 in cash and 0.667 shares of ONEOK for each Magellan share they own. The deal values Magellan at $67.50 per share, a 21.8% premium over its closing price on Friday. The deal will also result in a more balanced revenue mix for the combined company, with 44% of its business coming from transporting natural gas liquids, 21% from refined products, 7% from crude products, 10% from gas pipelines and 18% from gathering and processing. The company said it expects to generate annual cost synergies of about $100 million by 2025 and maintain a strong balance sheet and investment-grade credit ratings. One of the main benefits of the deal for ONEOK is that it will provide significant tax savings by converting Magellan's Master Limited Partnership (MLP) structure to a corporation. An MLP is a type of business entity that pays no corporate income tax, but distributes most of its earnings to its unitholders. By acquiring Magellan, ONEOK will be able to defer its corporate cash taxes from 2024 to 2027, thanks to the step-up in Magellan's tax basis from the transaction. This means that ONEOK will be able to reduce its taxable income by the amount of Magellan's assets that have appreciated in value over time. The estimated value of this tax benefit is about $1.5 billion, which has a net present value of about $750 million. This will enhance ONEOK's free cash flow and earnings per share, and allow it to invest more in its growth projects and return more capital to its shareholders. The deal between ONEOK and Magellan will not only create one of the largest energy infrastructure companies in the U.S., but also enhance ONEOK's ability to participate in the ongoing energy transformation with an increased presence in sustainable fuel and hydrogen corridors. What does this mean for ONEOK's franchise value and innovation potential? Sustainable fuel and hydrogen are emerging as key alternatives to fossil fuels in the global effort to reduce greenhouse gas emissions and combat climate change. According to a report by Bloomberg NEF, hydrogen could supply up to 24% of the world's energy needs by 2050, with a potential market value of $700 billion. Sustainable fuel, such as renewable diesel and biodiesel, can also help lower the carbon intensity of transportation and industrial sectors. By acquiring Magellan, ONEOK will gain access to its extensive network of refined products pipelines, terminals, and storage facilities that span across 18 states. These assets can be leveraged to transport and distribute sustainable fuel and hydrogen to various markets and customers. For example, Magellan owns a 50% stake in the Seabrook Logistics joint venture, which operates a crude oil and condensate export terminal on the Houston Ship Channel. This terminal could be used to export hydrogen produced from natural gas or renewable sources to international markets. Moreover, ONEOK will be able to capitalize on its existing expertise and infrastructure in natural gas liquids, NGLs, and natural gas to produce and deliver hydrogen. ONEOK is one of the largest NGLs gatherers, processors, and fractionators in the U.S., with access to major supply basins and demand centers. NGLs, such as ethane and propane, can be used as feedstocks for hydrogen production through steam methane reforming or other technologies. Natural gas can also be converted into hydrogen through various methods, such as autothermal reforming or pyrolysis. By expanding its portfolio of products and services to include sustainable fuel and hydrogen, ONEOK will be able to diversify its revenue streams, enhance its customer base, and increase its competitive advantage in the evolving energy landscape. The deal will also enable ONEOK to invest more in innovation and technology development to improve its operational efficiency, environmental performance, and safety standards. As a result, ONEOK will be well positioned to create long-term value for its shareholders, employees, customers, and communities.